there. We are live. Welcome to a live episode. Be the boss of your money. This is about making you the best possible version of your financial self. I call the show "Be the Boss of Your Money" because I want you to be the boss of your money, not your money to be the boss of you. You know, it's very easy to happen. It's very easy to let things get out of control, for things to take on a life of their own. So, welcome to a live episode of Be the Boss of Your Money. That's right, I am live streaming. This is not pre recorded. So, every snafu and thing I say wrong and word I mix up, blah, 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 you'll get to see it. But hopefully, I won't do that. But I'm doing this for a while now, and I want to welcome you. If you're watching this in the live stream, hit me up with a question in the comments. I'd love to answer your questions. That's my favorite part of this. If you're watching in the replay, welcome to you as well. First thing we always do is we get to a quick market update, but with perspective, give you an idea of what's going on in the market and in the economy and what I think could come next. And then we're going to talk about, tech stocks, tech/communications. I'm including social media in there, of course, streaming. It's just really, things have taken on a life of their own. So I want to talk to you about what I think could legitimately end this run we're seeing in the tech stocks. Okay. It's the most powerful force we've ever seen, the most amount of value that we've ever seen created in stock market history in this short amount of time is now. So let's roll the quick intro, and we're going to talk about this stuff, and it's going to be good. So stick around. You're definitely going to want to watch this. All right, we're back. So let's just do the quick market update just to give you an idea of a couple things that I am taking a look at. Okay, and I think it's important for you to get the daily update. It's not so much to say how much or how high or low the major averages moved, or what the price of gold or interest rates did. It's more than just giving you a quick snapshot of the overall market. Okay. But overall, today was a good day. So I'm going to give you some perspective in this, but Dow up 185 points, continues to move up. S&P moved up. Percentage wise, Dow and the S&P are about equal, but the NASDAQ up 1%, standout performer of the day. Russell 2000, that's the, down just, down less than 2 points. Not a big deal, but that's small cap stocks. They're important. That is a gauge of, I'll say it's your best gauge of how small businesses are doing in the United States. Large cap stocks have been creaming small cap stocks. Large cap stocks, they get bailouts. They have easier access to capital markets. They can do secondary stock offerings, hitting the debt market. Small companies don't get the same thing. So it's just, if you're thinking that it's, smaller businesses are at a disadvantage to bigger businesses, I'd say you're right. How could you not agree with that? VIX is down a little bit. VIX is the fear gauge. It just basically tells you that money managers, professional traders, investors, they are paying a little bit less to hedge their portfolios, so they're a little bit less worried. But that solidly under 25. So that's the line in the sand. You see that go above 25. And I think you're looking at a pretty substantial down move in the market after that, in my opinion. Okay, so what's next? All right, just want to show you this. We had jobless claims today, 1.2 million more claims for jobless benefits. So every week since the recession, claims have been over 1 million. This is another week of that, although they were a little bit lower than expected. I think the expectations was about 1.4 million. Tomorrow, Friday, August 7th, we're getting the non-farm payrolls for the month of July, and we'll see how that works, because now we're including the recent state reversals of their phased in openings because of spread of the coronavirus, the pandemic. So we'll get an idea of how the employment market, how the labor market held up tomorrow morning. So it's a really big report. You're going to want to definitely keep an ear out for that. Okay. I want to show you a quick chart. Now we're going to get into, actually, let me show you this first. All right. Here are the FANG stocks. The FANG stocks has a lot to do with what we're talking about, but Facebook was up 6.49%, up $15 a share. It hit a new high today of about, I think it was like 266 at one point today, but that's a new all-time high for Facebook. So Facebook continues to rally uninterrupted. And the big push today is that Facebook came out with a competitor to TikTok. Now, Facebook has tried with other apps to compete with TikTok without success, but they've had success rolling in new features into Instagram. You saw what Facebook did with Instagram in terms of some of the features that they copied from Snap. So they have a new service called Reels, Reels. I learned about it this morning, that it was available in the United States, everywhere, actually, as of yesterday. And so I have it on my Instagram app. So I'm sure you have it on your Instagram app. I'm looking forward to seeing the content that people create. And let's see if it could become as big as TikTok. So the thing is this, we're going to get into TikTok and Microsoft and all this stuff in a moment. But Apple continues to move higher at 455. I mean, I remember people are thinking, hey, that stock could hit 400 when it was 380. And now it's 450. So it was 380, like a week and a half, 2 weeks ago. I mean, the moves in these stocks, they continue to be big moves. It's not like they're slowing down. These stocks are literally galloping ahead. Amazon up 20. It's off its year high a little bit, but still above that 3,000 mark. Netflix up 7. Alphabet's been a laggard ever since they announced their earnings, but they're finally back to over 1,500, and Microsoft up a few bucks today as well. So when these stocks do well, you typically see the NASDAQ do better. They pull the market with them because these 6 stocks are about 30% of the S&P 500, which is trillions and trillions of dollars. Last thing for the update, this is my main dashboard, communications. By the way, in the communications, that includes stocks like Facebook, Alphabet, that's Google, and Netflix. So no wonder communications was the leading sector of the day and followed by technology. And I'm going to look, industrials were up a touch, financials were off, and energy were off. So it was a mixed day. I would have liked to have seen industrials and financials and energy up together. That gives you that V-shaped recovery. That's a feeling or an indicator that things are pretty good in the economy. So let's stop sharing the screen and just get back to my face, to my face. I'm going to go back to sharing a screen. So here's the deal. Okay. Again, folks, if you're out there, hit me up with a question. You want to ask about stocks and bonds and the market and personal finance and blah, all the stuff. So what's going to end the tech sector's giant rally? When I talk about tech, I'm including the FANG stocks, the Microsofts of the world. And there's a lot of other stocks. There's Salesforce, Spotify's of the world. There's so many stocks that you could take a look at that are, basically the tech sector is doing very, very well. There's a few exceptions to the rule, but by and large, if you've overweight tech, just by being invested in the S&P 500, you're overweight tech and communications because those are the biggest sectors. But if you have a stock portfolio, for example, overweight tech stocks, you see the advantages of that. What ends it? I would look at it this way. Look at the conditions that led to the rally in the NASDAQ. The NASDAQ is up 22 or 23% year to date. Amazon is up I think 65, 70% year to date. And there are other stocks that are up a lot as well. And I mean, the reason I'm using Amazon and Apple's up on the year, but these companies have such big market caps. And since the Standard & Poor's index is a market cap weighted index, the the bigger market cap stocks have an outsized impact. If Facebook, Amazon, Alphabet, Netflix, if these stocks were the smallest part of the S&P 500, the S&P 500 would be down. It's up like 3% year to date, but it would probably be down quite a bit, even if these stocks had these gains. But the bigger you are, the bigger your impact is in the overall market. And it just happens to be that the work from home, stay at home stocks are benefiting mightily from the social isolation environment that we're in. So they keep going up. There's two things that drive up a price of stock to me, in my opinion. The first one is fundamentals. Companies doing better than expected earnings and revenues. Better than expected earnings and revenue gets investors' attention. So they're doing well. They get pulled up, they buy the stock. But after a while, what moves the stock is not necessarily better than expected earnings and revenues. Stocks just go up because other investors see them going up. So they decide, hey, if they're going up, they must be good. I should buy them too. And that's called momentum. Now, momentum could go on for a very long time. And I'm not saying every time a stock goes into momentum mode that you should automatically sell it. No, you want to enjoy that momentum. That's where the big gains come from. And the momentum will stop when these companies finally come out with an earnings or revenue report that disappoints investors. And the higher the stocks go up, the bigger the earnings and expectations beat has to be in order for these companies to maintain momentum. And they've been doing that the last few quarters. Since the March 23rd low, these stocks are up substantially. The whole market's up substantially, but these stocks in particular. So what could end this? If you look at a change in the conditions. So I think the main thing is if we get a vaccine. I know it sounds like perverse way. You're like, could that be a bad thing? Look, we're not talking health. We're talking stocks and economy right now, okay? But if we get a real, truly legitimate vaccine in the next few months, I mean, the year is over in a couple of months. But if we get a really, a real vaccine, if that is very good for the economy and very good for the cyclical industrial stocks companies that are sensitive to the economy. And that could take away the impetus to keep buying more and more of the tech stocks, like the Facebooks, the Amazons, you know what I'm talking about, the Apples are. So that if that takes away the impetus to own these stocks, and investors have a shift out of the tech stocks into, the other economically sensitive stocks that could include industrials, energy, building materials, consumer discretion, restaurants, airlines, then, maybe money would come out of these large companies. All right. It hasn't happened yet. So maybe people are betting that we don't get the vaccine. But I do see industrials getting off, going up a little bit. So it's really tough to say what could end them. But I do think a change in the conditions that created this incredible environment for tech stocks generally, if the conditions change and become more favorable to the other economically sensitive stocks, then that could reduce or lower the impetus to keep buying the same tech stocks. So that's what I think. And you're getting pockets of it. I mean, we just had the states like Texas, Georgia, reopening, and then you had the spread of, a new reemergence or a substantial emergence of the virus. Okay, COVID-19, and you saw that substantially in Texas, Georgia, California, Arizona, and other states. In fact, Ohio is looked at as a potential hotspot. The Governor DeWine of Ohio, it was announced today that he tested positive for COVID. So, there's a lot of moving parts. So if you want to know what could end it, it's the tech stock run. It's either earnings and revenues could still be excellent, but they don't quite live up to investors' expectations that are becoming very lofty. Or if a vaccine comes out, that is what could end this stock run for these companies. And that could actually take the whole stock market down because these companies are so big. Their market caps are so gigantic. When I say market cap, I mean, I'm talking the total value of all their shares outstanding. that could actually, in a weird way, hurt the market because they're so big. So a COVID, vaccine might not necessarily be the best thing. I think that a vaccine would help your typical industrial companies. So that's what I'm thinking. Um, Fed's trying to pump up inflation, keep their foot in the gas pedal, keep interest rates low, keep printing money. So all of these things are in a way good because if there's a little whiff of inflation, that is considered good for debt payers, like the entire United States government right now. So we've got a lot of things to look forward to, but that is what I think could end the tech run. All right. If you have any questions after this, you certainly are welcome to let me know. I appreciate your tuning in, and I will see you again on Monday. Thank you very much.